Are you a Web3 business or artist selling NFTs? If so, you may be aware that your NFT sales can be exposed to sales tax liabilities across many different states. The problem is there's a low level of compliance related to paying this tax across the Web3 and NFT industry. In this video, I'm going to go over some of the issues related to NFT sales taxes and some of the future predictions for this tax and how it relates to our industry. Overall, like I said, there's a huge lack of awareness when it comes to NFT sales taxes. It's almost like crypto taxes back in the 2016 to 2017 era. Many people aren't even considering that they need to pay this tax or collect and remit this tax when they're purchasing or when they're selling an NFT. This is going to lead to huge potential compliance issues because these unpaid tax liabilities eventually the state regulators are going to want to come back for. And as we'll cover later, many states are interpreting their sales tax laws to include NFTs without any changes to them. So they're gonna, in that case, to businesses or artists that haven't been collecting in prior years, they're gonna come back for back taxes, stating that these laws were already on the books. So the lack of awareness around this tax and how to get into compliance with it industry-wide is creating a large threat to the whole Web3 NFT industry, but also to any individual business that has sold NFTs in the past or is planning to sell them in the future and is not compliant when it comes to sales tax collection and remit. Now, NFTs have created new complexities when it comes to sales tax considerations. The decentralized nature, the aspect to the fact that a lot of these transactions can happen in many tax jurisdictions, and sometimes the jurisdictions may not even be fully clear. For instance, if a transaction is happening in the metaverse. Overall, the new nature that's associated with a decentralized blockchain and non-fungible tokens and the new business models that are coming from these technologies, it's bringing new considerations to how will sales taxes apply to this. The last time we've seen something like this was during the e-commerce boom over a decade ago, where before we were seeing internet sales, people were mainly buying and selling in person, and sales taxes were fairly simple because, deciding where that tax jurisdiction is and whether or not you have to pay sales tax was pretty straightforward because it was all just at the point of sale within a store. Fast forward, e-commerce comes along, people are selling online to people in different states, in different countries, and the question starts to become, when are sales taxes applicable? That's when we have the big Wayfair court decision that basically states that that sellers could have tax liabilities in states that aren't their home state if they're selling and reaching certain economic thresholds in other states. What this Wayfair decision led to is you could be selling items in Pennsylvania, but if you sell a certain amount of those items and ship them to customers that are located in a different state, say Washington, you may also have to collect taxes in Washington. So this added a layer of complexity to sales taxes, and it added a need for new technological solutions and new tax considerations by the businesses that are selling these products to make sure that they're in compliance with collection and remittance. Now, we're all buying stuff online. That it's seamless and common that if you're buying from an out-of-state seller in a different state, they will be in a seamless manner collecting and remitting sales taxes on those sales as appropriate at that point of sale. So now we're in this new age and new ways of doing business with blockchain and with non-fungible tokens. And like I said, we find ourselves with new ways of doing business, and it's created new sales tax complexities, jurisdiction questions, taxability questions related to the products, and others. So this is shaping up to be a Wayfair 2.0. The level of complexity, ambiguity, and non-compliance is going to lead to large future compliance issues that I expect to see go to court and eventually set precedent that we'll all have to follow related to sales tax compliance for NFTs in digital assets. Now, what is the current state of NFT sales taxes? Well, I've done countless videos on this, so I encourage you to go to my channel and check some of those out. They're state specific. They're talking about specific topics, maybe retroactive taxes. So if you want to drill down on any of these subjects, I encourage you to check that out. But as a general overview, we have a handful of states that have put out specific guidance related to NFT sales taxes. Some states have been more detailed in that guidance than others. The most detailed state that we've seen so far is Washington State, which has really been out ahead in terms of addressing this issue in their interim guidance. But we've seen other states add NFTs to their taxability matrix, such as Pennsylvania, Minnesota, Wisconsin, along with others. So states are already starting to address this issue, and they're already issuing guidance on it and adding it to their taxability matrix in many regards. Now, for states that haven't done that, we need to consider that there's over 30 states that impose sales taxes on digital products and digital goods. Now, these states that we've seen issue guidance that I previously listed are basically looking at most NFTs as digital products and digital goods. And then, we see states like Washington and Wisconsin take an approach to considering the underlying product represented by the NFT and the taxability of that as well. But overall, these 30 plus states that are taxing digital products that may not have issued explicit NFT guidance are likely going to in the future, and the interpretation of their existing laws are likely going to place NFTs in that category of digital products and digital goods, and therefore in many cases this will be taxable. Like I said, this will lead to the additional issue of, did you pay taxes on your previous sales? Since these tax laws are already on the books, we're going to have to contend with the issue of retroactive taxes. So currently we have a handful of states with preliminary NFT guidance. We have a large amount of states where I anticipate that NFTs are already taxable. And then, there are some states where they're not taxing digital products. In that regard, it's unlikely to see standalone NFTs get taxed in most cases, although we still do need guidance from those states. But even within those states, as NFTs start to proliferate in the future, all NFTs really are is a representation of ownership of almost any type of asset. So there's always going to need to be this consideration of considering what the underlying product is and the taxability of that product within that state. So it's very important to understand what states from a product taxability standpoint are looking to tax NFTs or have rules on the books that may apply to NFTs. And that's important because once you determine your jurisdiction for a sale, we're going to need to look at, does that tax jurisdiction actually apply taxes to NFTs, and what approach that we want to take for sales happening within that state. So one of the biggest challenges for companies that want to get into sales tax compliance that is going to have to be addressed and it's going to have to be considered by industry participants is the fact that we need your customer's address to be able to determine the tax jurisdiction that any given sale is going to be applied to. And that tax jurisdiction will determine the tax rate, it'll determine the product taxability on whether or not the sale's even taxed, it'll determine where, when, and how you're going to file and remit the taxes after they're collected from a customer. So you're not going to be able to get into compliance for your NFT sales from a sales tax perspective unless at mint or at checkout you're collecting your customer's address. Then we have to take that address, cross-reference it across state databases after scrubbing it to determine what their actual rooftop address is and what sales tax rate and tax jurisdiction applies based off of that. So currently, there's a large degree of anonymity and pseudonymity in the space, but for us to have compliance in the future, that's going to have to change. So a prediction on my end is that in the future, for NFT sales that are going to be done in a compliant manner, if you're going to mint an NFT or purchase an NFT, you're going to have to provide your location information just like you would do if you're checking out at an e-commerce store in order to have the correct sales taxes applied to that sale. So that's a huge issue that needs to be addressed, is making sure that that customer information gets collected appropriately. Currently, there aren't many or any tax professionals discussing NFT sales taxes. It's at this point an overlooked tax that is even escaping most tax professionals. I expect that to obviously change in the future as more information gets put out, more guidance gets put out by states, and overall there just becomes more awareness of this in the industry. More tax professionals will start to focus on this, and the way that this will help Web3 businesses is it'll give them more tax professionals that can give them professional guidance to navigate these issues. But this is a very new issue that very few people are aware of or are addressing. Now, one of the last issues is once you as an NFT business are even aware of these tax issues and willing to comply with them, we need to be able to do this in a seamless manner, and there's really no way to accomplish this without automating the information collection from your customers in a seamless manner at checkout, delivering that tax rate to them in their native cryptocurrency in an automated fashion, and then collecting all the information from your customers so we have the appropriate tax reporting information to file and remit the taxes to the appropriate state agencies during the right filing cadences, whether that's monthly, quarterly, or yearly. The way that this is going to have to get accomplished is with the software, and my team at Digital Impost has built the first sales tax software designed for Web3 businesses that are selling NFTs and digital assets. So we've automated this whole process from the information collection to the tax rate calculation to the information collection and the filing and reporting. So this really is what is going to be needed to comply with NFT sales taxes. We're going to have to get a higher degree of knowledge and understanding within our industry, and then we're going to have the technology that can deliver the solutions to marketplaces and to NFT sellers that allow them to sell their NFTs and scale their business in a compliant manner and in a manner that is seamless for their clients, and that's what Digital Impost delivers.